Welcome to TalkTickers. We know you want the key insights from today's big earnings calls, and well, that's what we do.
Get to the core info fast.
Exactly. Today we're jumping into the latest report from a major name in athletic gear, sneakers, apparel, the whole lot.
And our goal, pull out the really important stuff, understand what's driving the numbers, and get you up to speed.
Right. So let's get straight into the results. First quarter looked pretty strong, actually beat expectations.
Yeah, definitely. Net sales were up 13%, both reported and currency neutral.
And if you strip out the Yeezy effect, they call it EC internally, the main Adidas brand did even better.
Up 17% for the core brand. That's significant growth.
It's not just top line either. Gross profit margin improved quite a bit.
Over 52%, yeah. That's up almost 100 basis points overall.
Even more for the Adidas brand itself, right? Like 160 basis points.
Exactly, which tells you something about pricing power and maybe managing costs better. Strong demand helps there too, of course.
For sure. And that flowed down. Operating profit hit $610 million.
Which is nearly 10% of sales. A big improvement.
And net income, a huge jump. Up 155% to $436 million.
Wow. That translates to, what, 2.44 per share, basic EPS?
And crucially, growth across the board. All markets reporting positive numbers.
That's always a good sign, isn't it? Not just relying on one region shows broad strength.
Okay, so let's dig into what's behind these numbers. Brand momentum, product heat, that seems key.
Definitely. They talked a lot about the Terra styles.
Yeah.
Samba, Gazelle, Special.
Campus, SL72, the classics. Seems like they're still flying off the shelves.
Absolutely. That retro vibe, it just keeps going. Yeah. And it connects, doesn't it? It's not just a fleeting trend.
And they're pushing these into more stores too, right? Wider distribution.
Yeah, it's just they see it as more than just a niche thing now. It's mainstream demand.
But it's not just the old stuff. They're seeing growth in low-profile shoes too.
Right. Big for women, but they mentioned it picking up for men as well.
And collaborations help in that, like the Bad Bunny one.
For sure. Using that kind of cultural influence, it's smart. Gets buzz, connects with that demographic.
Then there's this lifestyle running category, sort of bridging performance tech with everyday looks.
Yeah, like the EYL model they mentioned. It's that sweet spot, right? People want comfort in tech, but make it fashion.
Makes sense. That line between athletic and casual wear is basically gone now.
Totally blurred.
Yeah.
So if your running shoe looks good enough for streetwear, that's a win.
And they're bringing back the Superstar too, strategically.
Another icon. Relaunching it with partnerships, linking it to cultural stuff, like roller skating, apparently.
Okay. Nostalgia play.
It works. If you do it right, you capture a whole new audience alongside the old fans.
Apparel-wise, track tops and bottoms are strong.
Driven by that casual, retro look again. The three stripes are just iconic.
It all fits together, the footwear and the apparel trends.
Yeah, a consistent aesthetic. Oh, and they specifically mentioned animal print.
Really? Yeah. As a driver?
Yeah, for lifestyle products. Shows they're watching those, maybe smaller specific trends. They can still move the needle.
Interesting. Okay, let's shift to the markets. How did things look geographically?
Well, North America, the Adidas brand itself was up 13%. Pretty healthy.
But the total business only up 3%. That's the Yeezy comparison effect.
Exactly. Shows how much impact those big collabs can have on the top line, even if the core is doing well. The absence is felt.
Europe looked strong, though. Brand growth of 16%.
Yeah, and that's on top of good performance already, so sustained momentum there.
Greater China up 14%, and they think they're gaining share.
That's what they're saying, which is obviously huge, given how competitive China is. A very positive sign for them there.
Japan and Korea also saw growth, even with some issues in Korea.
Right. They had some warehouse problem, damaged stock. So growing, despite that, shows good underlying demand, I'd say. Resilience.
Latin America was a real highlight, wasn't it? Up 27%.
Huge growth. And they stressed it was volume driven across the board, not just, inflation in places like Argentina, though that plays a part.
Okay, so real demand increase. And emerging markets also strong, up 25%.
Yeah, those high growth regions performing well is definitely a positive for the bigger picture.
So how are they selling all this stuff? Channel performance, wholesale.
Wholesale was up 18%. Pretty strong.
For our retail stores.
Also solid, up 13%.
E-commerce was the interesting one, down 3% overall.
Right. And this is key. If you take out the Yeezy comparison again, the actual Adidas brand e-com was up 18%.
Okay. So the core digital business is actually growing nicely.
Exactly. It just shows you need to look under the hood sometimes with these numbers.
And they're still investing in physical stores, too. Net 70 new ones in the last year.
Yeah, flagships, modernizing spaces. It signals they still believe in that omni-channel approach. Physical stores matter for the brand experience.
Right. Okay, let's dive into the financials underpinning this. Gross margin improvement, what drove that?
They pointed to a few things. Better product costs, smarter trade planning.
And less discounting, less promotional activity.
Exactly. All signs of, better operational control and maybe stronger pricing power.
And overheads, they kept those pretty tight.
Remarkably so. Revenue up 13%, but operating overheads only up 3%.
That shows good leverage in the model. Costs aren't scaling as fast as sales.
Which is exactly what you want to see. Shows efficiency, good management.
They also mentioned financial income and expenses normalizing, which helped the net income figure.
Right, maybe fewer headwinds from currency or other financial items compared to before. Just a cleaner path to profit.
Inventory is up 15%. They say that's planned.
Yeah, planned to support future growth for the Adidas brand. It's a sign of confidence, basically. Building stock because you expect to sell it.
And the balance sheet looks healthy, more cash, less debt relative to earnings.
Yep, strong balance sheet, net leverage ratio down to 1.6 times. Gives them flexibility.
Okay, looking forward then. They seem pretty confident about hitting that 10% EBIT margin target by 2026.
Yeah, this quarter certainly helps that story. They also talked about strategy being global, but acting local.
Empowering local teams to cater to specific market tastes.
Exactly, which makes sense. What works in Berlin might not work in Shanghai, right? Tailoring things should lead to better results locally.
Interestingly, though, despite the strong Q1, they didn't raise their full-year guidance.
No, they kept it the same. And the main reason cited was uncertainty around U.S. tariffs.
Ah, right. There's that existing 10% on some goods and the worry about more potentially coming.
Precisely. It's a big unknown, so they're being cautious. Prudent, really.
What are they doing to manage that risk?
Trying to speed up customs, maybe reroute products if possible, and just watching the market on pricing.
So no immediate price hikes planned. They'll follow the market leaders.
That's what they indicated. A careful approach, trying not to jump the gun.
But they feel buffered somewhat by strong performance elsewhere.
Yeah, the strong order book outside the U.S. and momentum in other regions gives them some cushion if the U.S. market faces headwinds from tariffs. Diversification helps.
And they touched on key sports categories. Football, running.
Yep. Optimistic on football with big events coming up, doubling down on running both performance and lifestyle.
Training gets more localized, and basketball is improving.
Right, better performance there, key player endorsements helping, especially someone like Anthony Edwards generating buzz. New management focus too.
Plus ongoing innovation in running shoes, women's products, football gear.
Yeah, keeping the product pipeline fresh is obviously crucial.
Okay, let's quickly run through some points from the investor Q&A. Anything jump out?
Well, they said they haven't seen any real weakening in consumer demand lately. Still feel good about hitting guidance even with current tariffs.
Order book for the second half still looks strong globally.
Yep. And they clarified they don't source much directly from China to the U.S. for shoes and apparel, which might mitigate some direct tariff impact.
Hedging currency for 2025 and 26.
Yes, managing that euro-dollar risk. Strong emerging market growth, driven by focused local teams.
The basketball strategy is very performance-focused, using athletes to build credibility, and that's working well in China particularly.
Seems to be the case. No plans to raise prices outside the U.S. because of U.S. tariffs.
Latin America growth, a mix of value like inflation, but also real volume increases.
Correct. They're aiming to get operating overheads below 30% by 2026 by leveraging existing structures.
And that localization strategy should help profitability overall.
That's the expectation. Better alignment, less waste. In the U.S., pricing decisions will follow competitors, focus on retailer relationships.
And Q2 trading hasn't shown any slowdown from Q1.
Apparently still seeing good momentum, longer-term margin improvements possible, but cautious for the rest of 2025 given uncertainties.
They're really pushing running again, getting good feedback from retailers?
Yes, doubling down there. And finally, currency fluctuations might offer some short-term tariff relief, but the long-term plan is just profitable business everywhere.
Got it. That's a lot, but paints a pretty clear picture.
Definitely. Strong core momentum, but navigating some external risks, particularly those tariffs.
Okay, time for our This Is Not Financial Advice segment. Based on all this, I've got a thought.
Uh-oh, let's hear it.
So you've got that huge growth in Latin America, right? And this massive global trend of retro soccer stuff becoming like actual fashion.
Yeah, the blokecore thing, vintage jerseys.
Yeah.
It's everywhere.
Exactly. So here's the speculative idea. Go long on European vintage clothing resellers, specifically the ones digging up 90s and early 2000s soccer jerseys.
Okay, where's the connection?
The World Cup's coming to North America in 2026, which will only boost that trend. And with the brand's history and strength in Latin America, maybe that's where these resellers can find a goldmine of undervalued vintage stock.
Huh. Interesting angle, tapping into the source.
Highly speculative, of course, not financial advice. Do your own research, please. But it connects a few dots we talked about.
It certainly does, a creative one.
All right, that wraps up our deep dive on this earnings call. We've hit the key results, the drivers, the outlook, the risks.
Hopefully giving you a clear, concise picture of what matters most.
We hope so. What stood out to you listening to this? Did anything surprise you or raise new questions? Definitely worth thinking about.
Absolutely. Always good to engage critically.
Join us next time on TalkTickers for another deep dive. Thanks for tuning in.